Welcome back to the deep dive. Today, we're going to do a deep dive into the world of fertilizer production
Okay.
with a company called Madhya Bharat Agro Products Ltd, or MBAPL as they're known.
Right.
And I have their Q3 FY25 results presentation right here.
Oh, yeah?
Also, the earnings call transcript
Got it.
and some filings with the National Stock Exchange of India.
Okay, so we've got a pretty complete picture here.
Yeah, we've got lots to dig into.
Looking forward to it.
Just to set the stage, MBAPL is making some pretty big waves, and not just because, they help feed a growing planet.
Right.
Get this, they are the only company in India with full backward integration in their production process.
So that's unusual.
Yeah, pretty unique, right?
Yeah, absolutely. It's fascinating. You basically flipped the script on that whole farm-to-table thing. It's more like rock to crop for them.
That's a good way to put it.
They control every single step of fertilizer production.
Wow.
From the raw materials all the way to what farmers are using in their fields.
Okay. I'm already intrigued.
Yeah.
But before we get into the why of all that, let's take a look at the what.
Oh.
MBAPL's Q3 results are seriously impressive.
Yeah, let's hear it.
Revenue jumped 16.4% year over year. EBITDA is up a whopping 119.4%.
Wow, it's huge.
And profit after tax, hold on to your hats, it's up over 1,200%.
No way. That's insane.
This is not your typical fertilizer company performance.
Not even close. And that's where I think this backward integration thing comes in.
Okay.
See, most companies in this space, they just buy the ingredients,
Right.
mix them up and call it a day.
Yeah.
But MBAPL, they're doing it all themselves. Now, usually that means higher costs.
Yeah, you'd think so.
But for them, it seems to be a brilliant move.
How so?
It's given them this incredible control over their costs
I see.
and their whole supply chain.
That makes sense.
Think about all the chaos we've seen in global supply chains recently.
Yeah, absolutely.
MBAPL sidestepped all that.
Smart.
Yeah, they're playing chess while everyone else is playing checkers.
So they're saving money, but are they actually making money?
Oh, are they ever?
Yeah.
Their EBITDA per ton is a massive RS, 4,647.
Whoa.
To put that in perspective, it was RS 2,225 just a year ago.
So more than double.
More than double. Now, some of that is because fertilizer prices are up globally.
Okay, that makes sense.
But there's something else at play here, too.
Ooh, the plot thickens. Lay it on me.
Okay, so they've been shifting their product mix
Okay.
towards NPK fertilizers.
NPK.
That's nitrogen, phosphorus, and potassium.
Right.
It's a higher margin product than the traditional DAP fertilizers.
Okay.
That's diammonium phosphate, by the way,
Gotcha.
that a lot of companies focus on. And the demand for NPK is growing like crazy.
Really?
Yeah, farmers are looking to get the most out of their crops.
So they're riding a rising tide and they've picked the best surfboard.
Exactly. And they're not just riding the wave, they're strategically paddling
Okay.
to catch the biggest swells. The earnings call transcript even mentions them using the current DAP shortage to their advantage, pushing NPK even harder.
So they've got the magic formula for profit.
They do.
What are they doing with all this cash?
Expansion.
Expansion.
And in a big way.
Okay, tell me more.
So first, they're increasing phosphoric acid production at their existing facility in Sagar, Madhya Pradesh.
Okay.
Plus, they're building a whole new DAP-NPK plant in Maharashtra.
A whole new
A
plant.
whole new plant.
Oh.
This is a strategic move. You see, they're targeting the western and southern parts of India,
Okay.
which have huge and growing demand for NPK.
That makes sense. I mean, why not strike while the iron's hot?
Exactly.
But building new plants is expensive, right?
Yes.
Especially in a market like India.
It is.
Right.
But remember, MBAPL is all about efficiency.
Right.
For starters, they've already secured a whopping Rs 248 crore in funding for this new plant.
Whoa.
Serious commitment, right?
Yeah.
And they've got this clever strategy.
What's that?
They acquire and turn around closed down fertilizer plants
What?
instead of always building from scratch.
Oh, wow, that's smart.
It keeps costs down while still expanding their reach.
Wait, so they're like the fertilizer industry's version of a house flipper,
Haha. That's a great analogy.
buying up fixer-uppers and turning them into profit machines.
Exactly. And it seems to be working.
Interesting.
This approach gives them a real advantage over companies that have to rely on building everything new.
I see.
It's faster, often cheaper, and they're breathing new life into existing infrastructure.
I'm starting to see why they're turning heads. But hold on, there's got to be some downside, right?
Wow.
Currency fluctuations, changes in government subsidies.
Right?
Those are big unknowns for any company in India.
For sure.
especially one that relies on imported raw materials.
Absolutely. You're hitting on some key risk factors. The rupee depreciating against the dollar could seriously impact their costs.
Yeah, for sure.
But the earnings call transcript suggests they're not naive. They're actively hedging their currency exposure
Okay.
to minimize the impact of any wild swings in the exchange rate.
So they're not just crossing their fingers and hoping for the best.
No, they're not.
So they're managing that risk. But what about the reliance on government subsidies?
Right.
That's a whole other can of worms, right?
Absolutely. It's a major factor in the Indian fertilizer market.
Uh-huh.
The government is laser focused on making sure farmers can afford fertilizer,
Right.
which means subsidies play a huge role.
Yeah.
Now, could those subsidies change?
Well, yeah, I mean,
Sure. Could that impact MBAPL's bottom line?
I'd imagine.
Definitely.
But
But
don't leave me hanging.
here's where things get interesting. The Indian government is so committed to affordable fertilizers
Okay.
that they're likely to either increase subsidies or allow companies to adjust pricing
Okay.
if raw material costs keep going up.
Mm-hmm.
Essentially, MBAPL has a safety net.
Mm-hmm.
It's not a guarantee,
Right.
but it suggests a level of protection against market volatility that other companies might not have.
Interesting.
Yeah, it's a unique situation.
So they've got this buffer
In a way, yeah.
to help them weather any storms.
Exactly.
That's a pretty good position to be in.
It is.
All right, so we've talked about their impressive financials,
Mm.
their unique production process, and how they're managing some of the big risks.
Yep.
But now we want to dig a little deeper
Oh.
into their debt situation.
All right.
Because they're expanding like crazy, right?
They are.
Acquiring plants, building new ones.
Mm-hmm.
That's got to put a strain on their finances, right?
Well, it would for most companies,
Yeah,
but remember, MBAPL is playing a different game.
right, with the whole fixer-upper strategy.
That strategy of snapping up those closed-down plants
Uh-huh,
is not only brilliant from an operational standpoint,
right.
but it's a financial win, too.
How so?
They're avoiding a lot of the upfront costs of building from scratch.
So less debt from the get-go.
Exactly.
But they still need money for these acquisitions, right?
Yeah,
And that mega plant they're building in Maharashtra,
true. They are projecting a peak debt level of around Rs 350 crore by FY26.
okay, that's a significant number.
It is. But here's the thing. They're not taking on risky, high-interest loans from shady lenders.
Oh, good.
They already secured a big chunk of the funding,
How much?
Rs 248 crore,
Okay.
from big-name banks like SBI, Axis Bank, and Federal Bank.
Those are some serious financial institutions.
They are.
Sounds like they have confidence in MBAPL's ability to pay them back.
Exactly. And that confidence isn't misplaced.
Why not?
MBAPL's shift towards those higher-margin NPK fertilizers is playing a huge role in their ability to generate cash flow.
Right. Right.
Plus, their backward integration strategy means they're less vulnerable to price fluctuations that could squeeze profits.
So they're insulated in a way that other companies just aren't.
Exactly.
But let's face it, government subsidies are a huge wild card.
True.
Even if MBAPL is doing everything right.
Uh-huh.
A change in policy could throw a wrench in their plans, right?
That's the million-dollar question.
Yeah.
The fertilizer industry in India is intertwined with government support.
Yeah, for sure.
But here's what I find fascinating. The government's commitment to food security and affordable fertilizers for farmers
Okay.
means they have a strong incentive to keep the industry stable.
So you're saying they're not just going to suddenly pull the rug out from under a company that's performing well
Right.
and contributing to that goal.
Exactly.
So the government's almost like an invisible partner in a way,
That's an interesting way to put it.
adding a layer of stability to the whole equation.
Yeah, I like that. And the earnings call transcript actually backs this up.
Really?
MBAPL leadership seems confident that the government will continue to support the industry,
Okay.
either through those subsidies or by allowing price adjustments to offset rising raw material costs.
So they've got some reassurance there.
They do.
Okay, so they're managing debt strategically,
Yeah.
their profits are strong,
Yeah.
and they've got this sort of implicit backing from the government.
It seems that way.
But what about currency risk?
Right.
They import a lot of stuff.
They do.
The rupee's been all over the map lately.
It has.
That's got to be a concern.
It absolutely is. But MBAPL's on top of it.
How so?
Remember when we talked about hedging?
Uh-huh.
They're using financial tools to lock in exchange rates for future transactions.
So if the rupee takes a sudden dive, they're protected.
Exactly. It's a sophisticated strategy,
Yeah.
and it shows that they're thinking long term.
Okay, so they've got their ducks in a row financially.
Seems like it.
But let's zoom out for a second.
Okay.
MBAPL isn't a standalone company, right?
Right.
They're part of this bigger entity, the Ostwald Group,
Right.
which has all these other subsidiaries.
A whole bunch of them.
Doesn't that complex structure add a layer of risk?
It could.
I mean, what happens if one of those subsidiaries tanks?
You raise a valid point. Complex corporate structures can be tricky.
Yeah.
But from what we can tell, the Ostwald Group isn't some tangled web of interconnected finances.
Oh, okay.
Each subsidiary seems to operate fairly independently.
So they're not all tied together at the hip.
Not really. They're in different regions. They have their own management teams. They're focused on different markets.
So less of a too big to fail situation and more of a diversified portfolio approach?
Yes, exactly. And remember, Ostwald Group has a track record of successfully acquiring and turning around struggling companies.
Hmm.
They've clearly got a system that works.
So they know what they're doing.
It seems that way. It would be great to have more details on the financial relationships between those subsidiaries.
Mm-hmm.
But based on the available information, there are no red flags popping up.
All right, so far so good.
Yeah.
Financially, MBAPL seems to be in a very strong position.
I agree with that.
They're managing debt responsibly, they're generating impressive profits, and they're taking steps to mitigate the big risks.
Oh, good signs.
But there's one piece of the puzzle we haven't really talked about yet.
What's that?
The competition.
Ah, right. We've been so focused on MBAPL's internal workings.
Yeah.
We haven't really looked at the external landscape.
Exactly. The Indian fertilizer market is crowded.
Very crowded.
And they're going head-to-head with some big established players.
Real heavy hitters.
Especially in Maharashtra, where they're building that new plant.
Right.
That market is already dominated by companies that have been there for years, have relationships with farmers, and know the ins and outs of that particular region.
They do.
It's going to be a battle for market share.
No doubt about it.
And that's where those competitive advantages we've been talking about.
Like what?
The backward integration,
Right.
the focus on NPK fertilizers,
Right.
the savvy financial strategies.
Okay.
Those are going to be put to the test.
For sure. It'll be interesting to see how they fare.
So the question becomes, is MBAPL's success just a product of a favorable market and government support?
Okay.
Or are they truly a disruptor, capable of shaking things up and taking on the established giants?
That's the big question, isn't it?
It is. And to answer it, we need to take a deeper dive into the competitive landscape.
All right, let's do it.
Who are the major players in the Indian fertilizer market?
Okay.
What are their strengths and weaknesses?
Gotcha.
And how does MBAPL stack up against them?
Let's find out.
All right, so we've got the lay of the land. We know MBAPL is up against some serious competition.
Yeah, the Indian fertilizer market is no joke.
So let's name some names. Who are the big players MBAPL is going head-to-head with?
Well, you've got your domestic giants, like Coromandel International,
Okay.
IFFCO,
Uh-huh.
and Chambal Fertilizers.
Those are some big names.
They are. They've been around for decades.
So they've got that legacy going for them.
For sure. They have deep roots in different regions,
Okay.
and they've got the scale to compete on price.
So they can really push those prices down.
Exactly.
So how does a relative newcomer like MBAPL plan to carve out its space? What are their weapons in this fertilizer fight?
Well, their fully integrated production process is a major differentiator.
Right. We've talked about that.
Remember, they control everything from raw materials to the finished product.
Yeah, it's a pretty unique setup.
It is. And this gives them a cost advantage that most competitors can't match,
Okay.
which is crucial in a market where price sensitivity is high.
Right. Farmers are always looking for the best deal.
Exactly.
Okay, so we've seen how that translates into strong profitability for them. But cost isn't everything.
Sure.
Farmers care about quality,
Of course.
reliability, and relationships.
Absolutely. How does MBAPL measure up on those fronts?
Yeah, that's a good question.
That's where their strategic focus on NPK fertilizers comes in.
Okay, NPK again being nitrogen, phosphorus, and potassium.
That's right. It's not just a higher margin product.
Right.
It's also what's driving growth in the market.
So they're aligned with the market trends.
Exactly. Farmers are increasingly demanding NPK blends because they provide a more balanced nutrient profile for their crops.
Interesting. So MBAPL is ahead of the curve here.
They are.
Mm-hmm.
They're even capitalizing on the current DAP shortage to push NPK sales even further.
Smart move. But entering a new market like Maharashtra, which is already dominated by those established players, is a whole different ballgame.
It is. It's a tough market to crack.
How are they going to convince farmers to switch to a new brand?
That's the challenge, isn't it? They'll need to build trust,
Okay.
demonstrate the quality of their products,
Uh-huh.
and offer competitive pricing.
So basically, they've got to bring their A game.
Pretty much. The good news is they've got a few things working in their favor.
Like what?
First, their NPK focus aligns perfectly with the growing demand in that region.
Right. So they're in the right place at the right time.
Exactly.
Yes.
Second, their backward integration allows them to offer more consistent supply.
Okay. That's a big deal in a market that's prone to shortages.
Huge.
Yeah.
And third, they've got that financial firepower to invest in marketing, distribution, and building relationships with farmers.
So they're not just relying on a build it and they will come approach.
Nope. They're going to have to hustle to win over those customers.
It sounds like they're ready to put in the work.
They seem to be. But hold on.
What's up?
Did they mention something in the earnings call about sustainability?
Yeah, they did. How does that factor into their competitive strategy?
It's an interesting angle. Their marketing materials emphasize their commitment to minimizing the environmental impact of their fertilizers.
Okay.
Now, whether that's purely a marketing tactic or a genuine commitment to sustainability is debatable.
Right. It's hard to know for sure.
It is. But let's play devil's advocate here.
Yeah, I like where this is going.
Let's assume they're walking the walk on sustainability.
Okay, so they're actually doing what they say they're doing.
Exactly. Could that actually give them a competitive edge?
I mean, it could, right?
Absolutely. Consumers are becoming increasingly aware of the environmental impact of their food choices.
That's true.
If MBAPL can position themselves as the sustainable fertilizer option, that could resonate with farmers who are looking to tap into that growing market segment.
So they're not just competing on price and product. They're potentially differentiating themselves on values as well.
Exactly.
But let's be realistic. Sustainability often comes at a cost.
It does.
Can they afford to be both the low-cost provider and the eco-conscious option?
That's a tough balancing act.
Oh.
But remember, their backward integration gives them more control over their production process.
Right.
Which means they have more leverage to implement sustainable practices without necessarily breaking the bank.
I see.
Plus, they've got that government safety net we talked about.
With the subsidies and price adjustments?
Exactly. If the government is serious about promoting sustainable agriculture,
okay,
they might even offer incentives or subsidies to companies that are making those investments.
It's a fascinating dynamic. It's almost as if MBAPL is betting on the future.
In a way, they are.
They're betting that sustainability will become a bigger factor in purchasing decisions, and they're positioning themselves to capitalize on that shift.
They're playing the long game.
And that's what makes them such an intriguing company to watch.
Agreed. They're not just playing the short game. They're making moves that could reshape the entire industry.
So we've gone from what is MBAPL to could they become the next big thing in fertilizers? It's been a wild ride. What's the final verdict? Are you bullish on their prospects?
I'm cautiously optimistic.
Cautiously optimistic.
Yeah, they've got the key ingredients. A unique production process,
Right.
a strategic focus on a growing market, and the financial savvy to make bold moves.
Right.
Plus, they're operating in a country where the government is heavily invested in the success of the fertilizer industry.
There's always a but, right?
But the Indian market is fiercely competitive.
Oh.
They'll need to execute flawlessly,
Right.
build strong relationships with farmers, and navigate the ever-changing regulatory landscape.
Makes sense.
And their bet on sustainability is a gamble.
True. It could pay off big time, or it could backfire.
Exactly. It's a risky move, but it could be a game changer.
So the takeaway for our listener is this. MBAPL is a company with enormous potential, but their success is far from guaranteed.
Right. It's not a sure thing.
They're a fascinating case study in disruption, innovation,
Definitely.
and strategic risk-taking.
All of the above.
Exactly. And that's what makes this deep dive so valuable.
I agree.
We've taken a mountain of information.
Whole mountain.
And distilled it down to the essential insights.
The good stuff.
Now it's up to our listener to decide whether they believe MBAPL has what it takes to become a dominant force in the global fertilizer market.
That's right. It's their call to make.
Well said. And on that note, we'll leave you with one final thought to ponder.
Okay, hit me.
India is already a major player in the global fertilizer market.
That's true.
With companies like MBAPL pushing the boundaries of innovation and sustainability, could we be witnessing the rise of a new era in fertilizer production?
That's a great question. One that I think is worth exploring further.
It is. Thanks for joining us on this deep dive.
Mm.
Until next time, keep exploring.
Thanks for having me. It's been a pleasure.
Okay, so we've looked at MBAPL's financials, their growth strategy, and even their risk management.
We've covered a lot of ground.
Now it's time to dive into the Shark Tank.
The Shark Tank.
The Indian fertilizer market.
Yes, the main event.
We know it's crowded, heavily influenced by government policies,
Right.
and MBAPL is swimming with some big fish.
Definitely.
What can you tell us about this competitive landscape?
Well, it's a complex ecosystem.
Yeah.
You've got your domestic giants,
Okay.
like Coromandel International, IFFCO,
Okay.
and Shamble Fertilizers.
Big names.
Huge.
Huh.
All vying for market share. They've been around for decades.
Yeah, they've got that incumbency advantage.
They do. They have deep roots in different regions, and they've got the scale to compete on price.
So they can really undercut the competition.
Exactly.
So how does a relative newcomer like MBAPL plan to carve out its space?
It's a good question.
What are their weapons in this fertilizer fight?
Well, their fully integrated production process is a major differentiator.
Right, that's their secret sauce.
You could say that, remember, they control everything from raw materials to the finished product.
Yeah, it's a pretty remarkable setup.
It is, and this gives them a cost advantage that most competitors just can't match,
Right.
which is crucial in a market where price sensitivity is high.
For sure. Farmers are always going to be looking for the best deal.
Absolutely.
Okay, so we've seen how that translates into strong profitability for them. But cost isn't everything.
Nope.
Farmers also care about quality,
Right.
reliability,
Oh, yeah.
relationships.
Absolutely.
How does MBAPL measure up on those fronts?
That's where their strategic focus on NPK fertilizers comes in.
Right, NPK again being nitrogen, phosphorus, and potassium.
That's it. It's not just a higher margin product.
Okay,
It's also what's driving growth in the market.
so they're riding the wave.
Farmers are increasingly demanding NPK blends
Okay,
because they provide a more balanced nutrient profile for their crops.
interesting. So MBAPL is ahead of the curve here.
It seems that way.
They're even capitalizing on the current DAP shortage to push MBK sales even further.
Which is a smart move.
Very smart. But entering a new market like Maharashtra, which is already dominated by those established players,
Right.
is a whole different ballgame.
It is. It's a tough market to break into.
How are they going to convince farmers to switch to a new brand?
That's the million-dollar question.
Oh.
They'll need to build trust,
Okay.
demonstrate the quality of their products,
Uh-huh.
and offer competitive pricing.
So basically, they need to prove themselves.
Exactly. The good news is they've got a few things working in their favor.
Like what?
First, their NPK focus aligns perfectly with the growing demand in that region.
Okay. So they're in the right place at the right time.
Right. Second, their backward integration allows them to offer more consistent supply.
Which is a big deal in a market that's prone to shortages.
Huge.
Right.
And third, they've got that financial firepower
Uh-huh.
to invest in marketing, distribution,
right.
and building relationships with farmers.
So they're not just sitting back and waiting for customers to come to them.
No, they're not. They're going to have to be proactive.
Makes sense. But hold on.
What is it?
Didn't they mention something in the earnings call about sustainability?
They did. It was just a brief mention.
How does that factor into their competitive strategy?
It's an interesting angle.
Right.
Their marketing materials emphasize their commitment to minimizing the environmental impact of their fertilizers.
Okay, but is that just greenwashing?
That's the question, isn't it?
It's hard to know what's genuine and what's just marketing spin.
For sure. But let's play devil's advocate here.
Okay, game.
Let's assume they're walking the walk on sustainability.
All right, so they're actually doing what they say they're doing.
Exactly. Could that actually give them a competitive edge?
I mean, it could, right?
It definitely could. Consumers are becoming increasingly aware of the environmental impact of their food choices.
That's true. More and more people want to know where their food comes from and how it's produced.
Exactly. And if MBAPL can position themselves as the sustainable fertilizer option, that could resonate with farmers who are looking to tap into that growing market segment.
So they're not just competing on price and product.
Right.
They're potentially differentiating themselves on values as well.
Precisely.
But let's be realistic. Sustainability often comes at a cost.
It does. Often a significant cost.
Can they afford to be both the low-cost provider and the eco-conscious option.
That's the challenge, isn't it?
It is. It's a tough balancing act.
But remember, their backward integration gives them more control over their production process,
Right.
which means they have more leverage to implement sustainable practices without necessarily breaking the bank.
Okay, so they've got that flexibility.
They do. Plus, they've got that government safety net we talked about.
With the subsidies and price adjustment.
Exactly. If the government is serious about promoting sustainable agriculture,
Okay.
they might even offer incentives or subsidies to companies that are making those investments.
So the government could actually help them offset some of those costs.
Potentially. It's a fascinating dynamic. It's almost as if MBAPL is betting on the future.
In a way, they are. They're betting that sustainability will become a bigger factor in purchasing decisions.
Right.
And they're positioning themselves to capitalize on that shift.
It's a bold strategy.
It is. And that's what makes them such an intriguing company to watch.
Agreed. They're not just playing their short game. They're making moves that could reshape the entire industry.
So we've gone from what is MBAPL to could they become the next big thing in fertilizers? It's been quite a journey.
It has. We've covered a lot of ground.
What's the final verdict?
Well, I'm cautiously optimistic.
Cautiously optimistic.
Yeah, I mean, they've got a lot going for them.
Okay.
A unique production process,
Mm-hmm.
a strategic focus on a growing market,
Right.
and the financial savvy to make bold moves.
Plus, they've got the government in their corner.
In a way, yes.
Mm,
But the Indian market is fiercely competitive.
true.
They'll need to execute flawlessly,
Right.
build strong relationships with farmers,
Mm-hmm.
and navigate the ever-changing regulatory landscape,
And of course, there's that gamble on sustainability.
right? That's a wild card. It could
Yeah.
pay off big time or it could backfire.
So there's a lot of uncertainty.
There is,
Hmm.
but that's the nature of business, isn't it?
I guess so.
Yeah.
So the takeaway for our listeners is this. MBAPL is a company with enormous potential,
Absolutely.
but their success is far from guaranteed.
Right. It's not a sure thing.
They're a fascinating case study in disruption,
Definitely.
innovation,
For sure.
and strategic risk-taking.
All of that and more.
It's been a fascinating deep dive.
It has. I've learned a lot.
Me too. So to wrap things up,
Okay.
India is already a major player in the global fertilizer market,
No doubt about it.
with companies like MBAPL pushing the boundaries of innovation and sustainability.
Ah.
Could we be witnessing the rise of a new era in fertilizer production?
That's the big question, isn't it?
It is,
Oops.
and that's what makes this industry so exciting.
Agreed. There's so much potential for growth and innovation.
Well, that's all the time we have for today.
Okay.
Thanks for joining us on this deep dive into the world of MBAPL and the Indian fertilizer market.
It's been a pleasure.
Until next time, keep exploring.